The market rally is starting to run out of steam, the risk on market rally, but will it continue, or is this it for a while? Let's jump in and take a look at what is going on. The Dow finished up 0.71, 239 points today. S&P basically flat, up 0.19. NASDAQ down 0.19. So basically flat on NASDAQ, S&P. Dow up a little bit on Walmart and Home Depot as they beat expectations, showing a strong consumer. People still continuing to buy even at higher prices. And although trading down and the trends that they're seeing there, of course, we have the meme stock frenzy going on. We'll take a look at the chart of the day here in a second with that. But housing market, home buyers are backing out of more deals as high mortgage rates persist and recession fears linger. So 63,000 deals on existing homes fell through in July, about 16% of the homes that were under contract, especially with new construction homes. The resale market deals are falling through there as well, but mainly it's the builders that are feeling the pain. They are not starting new homes right now. They're going to take their time, watch the market, as real estate is interest rate. It all hinges on interest rates. The higher the rates go, the lower the values go, the more difficult it gets for people to qualify for a home. The other shoe that is about to drop is the automobile market, used cars and new cars, with the average car payment around $750 to $1,000 a month on vehicles during the pandemic. With inflation where it's at now, it's putting pressure on people to be able to afford those payments. So we're going to see some strategic defaults on vehicles, and you're going to see prices start to come down on new and used vehicles, although Ford and GM just raised their prices on EV vehicles due to the new Inflation Reduction Act that was signed into law today. It's funny, inflation reduction, it's actually the opposite. This is adding to inflation because it's a tax and spend bill, which is going to increase inflation. And we already saw the car companies, because of this EV tax credit that is putting pressure on automobile manufacturers. Cars have already jumped in price in proportion to the amount that it's increasing the cost of those vehicles. It's also decreasing people's ability to qualify for those. So interesting stuff coming out of Washington, unintended consequences of good intentions, as they say. So we'll have to continue to watch that and see how things play out. But anytime money is put on the streets by Washington and Congress, that obviously creates inflation. It's more money put into the economy, which is inflationary. So we'll just have to see how these things play out. And the Fed, as they have been coming out and talking about and are going to continue to talk about, is nowhere near finished with the hiking cycle and quantitative tightening cycle. This is the chart of the day. Bed Bath & Beyond up. Let's look over the last couple of days since the low of $4.62, up 518%. Nice little 5x right here if you got in on that meme stock, but it has unwound and is kind of bouncing around. So we will have to see where that goes and where it ultimately lands. And the next one to take a look at is AMC. Let's see what AMC is looking like. AMC had a nice little pop here lately, but that's starting to unwind. GameStop has been up and down here lately, starting to unwind a little bit. And then yesterday we talked about Geo, Michael Burry's new bet. Let's see how Geo is doing. Geo is starting to unwind that little pop it had yesterday on the Michael Burry news. Michael sold all of his stock in June and took a position in Geo yesterday, or at least it was disclosed yesterday in his filing. It was up about 23%, but has given the bulk of that back. So interesting times out there right now as this risk on rally starts to lose a little bit of steam. So let's take a look at the Dow Jones continuing to reach out, and let's put the moving averages on here because these are critical. So now it is getting to that 200-day. It's above the 200-day moving average right now. NASDAQ is just about to touch it. S&P is rejected off that 200-day moving average, but the Dow found support today on the 200. So will it hold? This is the critical point here where it can find support to kind of get back after the previous all-time high. Very interesting play here in what's going on. So it'll be, I'll tell you what, it'll surprise a lot of people if this gets back to previous all-time highs right now without further retracement. So very interesting point in the charts right now for traditional markets. Let's take a look at Bitcoin. Bitcoin is starting to run out of a little bit of gas here, lost the 100-day moving average. It was playing with that yesterday, found a little support on it. but has come down and lost it on the weekly. Still finding support on the 200-week moving average, which has traditionally proven to be an area of opportunity for buying. But as this 50 and 100-week moving average is about to cross, we talked about that yesterday. Price, the last time that happened, dropped about 10% after that cross, or right about when it crossed. So if price continues down about 10%, that's going to bring it back down to about the $19,000 range, somewhere in there. Into that, 10 to 13% is in that, $20,000 range, somewhere around there. So 19 to 20,000 is really the next level. So let's take a look at that. And let's get back here on the daily and kind of take a look at where price could potentially be heading. And that would be right around this area here, this last area low, to either potentially take out or find support as price was consolidating. That's really that area of support resistance in the 20,000 range is kind of critical. And if that doesn't hold, then Bitcoin will definitely go back down and check that previous low that was put in. Let's take a look at the dollar here. Dollar was on a little bit of a rise the last couple of days, retreated this afternoon. And then we have the VIX, the volatility index, is reaching low levels. Generally, whenever the VIX gets this low, that's your selling opportunity. And when it gets high up here, that's your buying opportunity. So interesting price action here, and indications in the VIX of where we are in the market. Ethereum is continuing on its march towards the merge, retracting a little bit here the last few days. So we'll have to see if this momentum can continue, or if ETH is going to continue to unwind since the merge. And many of the altcoins are kind of reversing their moves here lately, although trending in the range now into a more longer term consolidation for a lot of these coins here. So interesting times, like I said, for traditional markets at a very crucial moment. A lot of historical reference by with the Dow reclaiming that 200-week moving average, although it did retreat this afternoon. It backed up a little bit. And of course, a lot of talk about the 50% retracement. And right now, the Dow has cracked the 618. It broke through the 50%, cracked the 618, and that's where it found rejection just above the 618. So will it continue? And the talk is obviously on the S&P, that anytime the S&P has retraced 50% from a bear market, it did not roll over from that point. So let's see where it's at into a longer bear market. So it has cracked the 50% retracement. So the commentary out there, the narrative out there is that once the S&P has broken a 50% retracement, it never went on to a bear market after that. So let's go and see what we find in 2009, because that was the last real lengthy bear market that we had. And let's take a look at what happened in 2009. There's the peak. There's the trough of that first major retracement right there. It broke the 50% mark right there, and it continued on to a bear market. And of course, that was a different time. That was a banking crisis, banking failure. The second move right here, let's see what that retracement looked like off of the all-time high. The first drop right here, that retraced to the 618. Second drop, retraced to the 382 off the all-time high, and then this major area here retraced 50%. So it did it several times there and continued into a bear market. So I don't know where that information is coming from, that once the S&P retraces 50% off a bear market, it never continues down. I mean, it did it several times here in 2009, and it's done it in the past. So interesting. I guess you can read into the charts pretty much anything you want. And but this is a nice rally that we've had here in all the indices. So what's really going on here? Short squeezes, obviously, number one. Number two, hedge funds. Hedge funds have got to make up some ground. They're down 30%. So what do? They just buy. Whenever you're down, buy, drive the market up. And then at some point you have to exit, pull your chips off the table, let it unwind, and do it again. So the hedge funds cannot continue this. They're going to have to take some profits and let this unwind and do it again. So that is at some point most likely what's going to happen. But this could potentially continue if you could get enough traction behind it. But the Fed has not pivoted. The Fed is just getting started. We still have inflation. We still have the recession. So very interesting price action there. Bitcoin tightening up on the range here. A couple of different trends you can look at on Bitcoin in terms of what it could do next. Your major trend line right there, that price is holding steady on. So all we can do is just sit and watch and wait. But I know the market is boring a lot of people to death right now. It's just, consolidation and accumulation, waiting for resolution. And with the Fed not meeting this month, we don't know really what the next inflation print is going to look like, what the Fed's response is going to be to that. So as we get into September and towards the end of August into September, and we get that next inflation print, the next Fed meeting, we should get some guidance on what's going on. But until then, could be major fireworks if the markets decide to reverse, if they run out of steam and reverse, or it could just be a very boring rest of the August, getting into September, waiting for the next Fed meeting. So nobody knows. All we can do is wait and see. I'll see you in the next video.